The 1920s, a time of low taxes, mass production, more leisure time, new innovations, and most of all, a booming economy. Good morning, America. Today is September 3rd, 1929, and the Dow Jones has just reached its all-time high at 381 points. Things have been looking good lately with high wages, high productivity, and low taxes. Mass production and fewer worker hours have resulted in a larger consumer market. People are taking out huge loans with little to no down payments for investments such as stocks, speculating that the economy will continue to rise. Secretary of Treasury Andrew Mellon just said this month, "There's no cause to worry. The high tide of prosperity will continue." I'm here with senior correspondent Daniel Olshayak to discuss our economy. Hello, Mr. Olshayak.
Hello, Mr. Holtz. I am so honored to be here with you today.
So, Mr. Olshayak, what do you make of the current economic boom?
Well, David, to be honest, things may look good now, but we are getting into an economic bubble, which is eventually going to pop. People buying stocks right now are speculating that the economy will continue to boom, which it may not. Many of these investors have little to none of their own money invested. They're taking loans up to 100% to buy these stocks and goods, which is a huge economic risk. I'm sorry, David, but I believe it's the truth. Investors are buying on the margin, meaning that people are taking risky investments with borrowed money. Buying on the margin has been successful the past few years, but investors must realize that stocks are bound to drop sooner or later.
I think you are in over your head. The stocks are doing great. Don't you pay attention to what the tickers say?
The tickers are part of the problem. These stock tickers are more like stock trickers. They are showing values that misrepresent the company. The revenue of the company isn't the number on the ticker, so people are getting invalid information.
Well, Mr. Olshayak, what do you make of the high demand we have and the increased consumer confidence?
Well, really, Mr. Holtz, the demand is artificial. People are purchasing goods and stocks that they don't necessarily need for high prices. Once the public realizes that they're overspending on these non-essential items, they will stop buying these items and stocks, causing the prices to drop, eventually causing the economy to decline. Watch my interview with economic expert Justin Beck for more detail as to why the market will crash. Mr. Beck, as myself and many others believe, speculation is what is going to cause the market to plummet. Can you, as an economic expert, please elaborate on how this is a direct cause as to how the market may crash?
Okay, yeah, I think that I can help you a little bit with that. The idea with speculation is, and one of the things that makes speculation so risky, is that for you to take a prudent investment, for you to make a prudent risk, you have to have what we call some skin in the game. And by that we mean you have to have some investment there, and that should be your money. And if you don't have enough of your own money in the investment, then you're much more likely to be risky.
Speaking of a high risk when speculatively buying stocks, another major reason I believe the market is going to crash is because all these investors are buying on the margin. How do you think this is going to affect the market, and what do you think will happen to all these investors and their money?
I think that's a good question. When you're investing in the margin, there tends to be a sense that there's high risk, high reward. But people tend to look at that in the era in which we're talking from a very optimistic lens, that there can only be high reward. But when you are investing on the margin, the high risk can be equally great.
Okay, that is all the time we have for today. Thanks for joining us today, Mr. Olshayak.
All right, David. Well, don't say I didn't warn you.
Hello, ladies and gentlemen. I'm David Holtz, live in New York today, Tuesday, October 29th, 1929. Our latest story is on the decline in the market that has been hitting hard the past week. Thus, the market severely declined today. I myself, along with many others, have been affected by the crash, and I wish I had listened to Daniel Olshayak. We have Mr. Olshayak reporting to us live on the streets to hear what the public has to say about the crash. Daniel.
We're here with entrepreneur Philip Belder to tell us his feelings about all the money he has just lost. Philip?
Well, Dan, this is definitely an unfortunate situation. With the stock market crash, I've lost most of the base capital in my investment firm. Basically, because of this crash, because of my speculation and lack of foresight, I basically put all my money on the line into one basket, and because of that, this basket tipped over and I lost everything in it.
Now I'm back and was lucky enough to get Mr. Olchak back in the studio. And Daniel, I stand corrected.
I told you the market was going to crash, Mr. Holtz, and it did.
Yes, now I realize how speculation really did cause damage. All the investors who bought stocks without any money of their own took a loss on their investments. Many have withdrawn their money from the stock market, thus lowering the price of stock. Speculation was not even a good idea to begin with because of the big risk people were taking. Also, people who bought on the margin expected a big reward in turn for the risk, while in fact they took a hard hit. You mentioned to me when we last spoke how the economic bubble would pop, and it did as the market came crashing down today.
See, Mr. Holtz, I knew what I was talking about, and now billions of dollars have been lost just over the course of 1 week. However, some people see this crash as an economic opportunity. Market analyst R.W. McNeil claims that this is the time to buy stocks. He recalls the words of J.P. Morgan, saying that any man who is bearish on America will go broke. McNeil continues to say that within a few days there is likely to be a bear panic rather than a bull panic, and that many of the low prices are a result of hysterical selling that are not likely to be reached again in many years. At any rate, Mr. Holtz, people should have been more responsible with their money. Thank you.
Well, this is the last show I'm going to have because the network canceled me. After the market went down, myself along with millions of people out there have lost tons of money. I can't even afford a suit anymore. My house got foreclosed, I'm about to lose my job, and my wife left me. Before I go cry myself to sleep, I would like to relate all these events to the core themes of the American dream and hope and despair. In this instance, the American dream was negative. Americans became greedy and sought to make a quick buck through risky investments even though they could not afford it. The stock market crash also relates to hope and despair because Americans were optimistic to rise from their economic class during the boom, but then many faced the despair of the crash and the Great Depression.